President Donald Trump meets his Chinese counterpart, President Xi Jinping, for the first time this week, and the stakes for both leaders and both countries are enormous. The meeting won't have on display the kind of state visit pageantry that Mr. Xi enjoyed on his 2015 visit to the UK. Instead, the leaders of the world's two largest economies will get down to high-stakes business at Mr. Trump's private Mar-a-Lago resort in Palm Beach, Florida. Why is this meeting such a big deal? Both leaders are hardline nationalists. Mr. Xi's China dream of national rejuvenation is on a collision course with Mr. Trump's pledge to
make America great again.
Mr. Trump tweeted why he thinks this meeting will be a very difficult one, blaming China for the U.S.'s massive trade deficits and job losses. For context, let's look at some numbers. The U.S. imports more goods from China than from any other country. Last year, American consumers spent nearly $500 billion on Chinese goods and services. Compare that to China, which is third on the list of customers for U.S. goods after Canada and Mexico. The U.S. exported around $116 billion in goods and services to China last year. So when you compare the U.S.'s imports from China to its exports to China, you see how wide the trade gap has become. The Trump administration accuses China of unfair trade practices, including its government subsidies to unprofitable companies, which allow these businesses to sell goods to U.S. consumers at artificially low prices. In other words, the art of the steal.
What China's done to our country, because of our politicians that don't know truly, they're incompetent. What China's done to our country is the greatest theft in the history of the world. It's really true.
During the presidential campaign, Mr. Trump said he'd reduce the trade gap with China by negotiating better deals. He threatened to declare China a currency manipulator and impose across-the-board tariffs on Chinese imports. Doing either or both would likely ignite a trade war, and that, many economists say, could harm both countries' economies. Meanwhile, Mr. Xi aims to solidify his own power in China by maintaining China's growth, which has been largely built on increasingly massive exports to countries like the U.S. For Mr. Trump, reversing that long-term trend won't be easy. The U.S.'s overall trade gap widened starting in the late 1990s. That's when China emerged as a world trading power. Recent research shows that the surge of imports from China put downward pressure on U.S. wages and manufacturing employment. On the plus side, U.S. consumers have enjoyed lower prices. Commerce Secretary Wilbur Ross said in a paper last year that eliminating the $500 billion U.S. trade deficit, the bulk of it with China, would add to growth, create millions of jobs, and generate trillions of dollars in revenue to pay for tax cuts. Some economists take issue with the blame China approach, arguing that automation is the main culprit in the loss of U.S. factory jobs. They point out that U.S. manufacturing output is at or close to record levels. This week's meeting at Mar-a-Lago will be a test of both men's mastery of the art of the deal, with Mr. Trump hoping to reverse decades-long economic trends and Mr. Xi trying to maintain them.